All right, welcome and good evening, ladies and gentlemen. All right, welcome and good evening. All right, to Portfolio 2K Cashflow on Friday with I'MPossible Terence. All right, now if you're here with me right now, just drop a note, leave a note, say hello. All right, and hi Su Young, hi Christopher. All right, now so great to have all of you leaving comments in the session. Right, and we can talk for a little bit before we let all the others stream in into our Friday's live session over here. Right? This is going into the third week, all right, of our brand new portfolio. Now, so many of you who are joining us for the first time, all right, this brand new portfolio has two main targets. One, all right, is what we call a percentage target. All right, our percentage target is to hit a double-digit, right, annualized return on a year-to-year basis. Right? Ultimately, we're trying to show the retail investors, right? You don't need to be in my investment community. You don't need to know any of my strategies. In this Friday session, it is meant to educate the public, right? It is meant to show all of you, right, that a cash flowing portfolio is not as difficult to build as you think it is, right? With the skill set of selling options, right? They are actually very simple non-time consuming approach that you can use to design a portfolio and help you grow your money. All right. So our double digit returns are basically 20% per annum. All right. But we have added on another target, all right, which is with our model portfolio of $100,000 in cash. Right. So this is $100,000 cash portfolio. So every trade, every investment that we do, all right, is done in cash over here. Yeah. All right. So that's the main focus. Yeah. So we won't run into trouble. Yeah, okay, and we will not, kind of overuse the capital that we have. All right, so safety is first, right, and safety in the first position. Yeah, okay, now, and on top of that, we are trying to hit a target of $2,000, right, on a month-to-month basis. Yeah, okay, all right, now, so that's our aim, that's our goal, right, and yes, more people has joined us over here. All right, thank you very much for both the Susans who are joining us, Susan Chung, Susan Wong. All right, thank you for being back again, and hi, Alex. All right, and take in Anthony. All right, good evening to all of you. Okay, all right, now, so since all of you are here and ready to go, all right, let me start this session officially. All right, it is another Friday. All right, and all right, let me kind of start, all right, with the right tune and the right synchronization. Right, whatever that I'm going to say later on in this session today, right, is meant to be taken as a form of education, right? Is to tell you more about the stock market, how I think as an investor in the stock market for more than 10 years, how I built my portfolio, right? What is some of the safest and most prudent approach that you can adopt in the markets, all right? And, all right, to basically let you see, all right, what is my coaching style? What is my mentorship style? Right, and if you like what you're seeing over here, right, you can explore any of our mentorship programs, right, on the next level, right, if only you're interested, right. But whether you are one of our students or not, right, I will still be running this session every single Friday, right, just to show all of you, right, that despite all market conditions, right, what we set, right, will be achieved and can be achieved. Yeah. Okay. All right. Now, so having said that as well, all right, just putting out a disclaimer, all right, whatever that I'm going to say and do today, all right, is taken from my own mind, all right, and is by no means any form of recommendations or suggestions for you to take the trade. All right. I'm just trying to explain to you how I think, all right, and what kind of trades I'll be doing and adding to my own portfolio. Yeah. So please be aware that all forms of trading and investment bears a risk of loss, right? You need to understand all the risks involved before deciding, right, to follow or take any of these trades into your own personal accounts. Okay. All right. Now, so welcome once again, everyone. And if this is your first session with us, all right, which is like the Facebook user that I've just seen over here, all right, I'm not sure if Jimmy is already here helping me out. All right, but yes. All right, look at the banner over here, ladies and gentlemen. All right, if it is your first time, please go to streamyard.com/Facebook. All right, you'll be brought to a pop-up page. All right, click on the Facebook button. All right, and that will allow your profile, all right, to be kind of accessed, all right, so that when you leave comments in our Facebook live session, all right, I will actually be able to see, all right, who's actually leaving the comments, all right, like Anthony over here. All right, hi Anthony. All right, thank you for being back and joining me again. All right, now, so without further ado, before I get scolded and reminded once again for being too old and forgetful, all right, I've removed the banner. All right, so I've removed the banner. All right, so let's get our session started. Now, so I will kick things off, all right, with, all right, showing all of you how I read the market, what are my concerns, all right, and where do I expect markets to go, and where does the danger lie? Okay, now, So I'm going to pull the charting over, right? So I have my charts on SPX, which is basically the S&P 500 index itself, all right? And as all of you can see over here, all right, if I bring down the time frame, all right, let's go from a 6 months first, and then we expand the timeline, okay? All right, now looking at 6 months, all right, do all of you remember that I have this downward sloping channel, right, which I've drawn, all right, to all of you quite some time back, right? And I did say that over here, it was actually a very convincing break, right? So let me expand it, right? This, right, is actually a very convincing break, right? So if you study candles over here, right, these are what we call them, kind of Maribozu candles, right? So they have a lot of conviction in this sell-off and the move, right? And that has also broken the support level, right? And that's why there is a very strong significance, right? Not just the candle alone, right, but the combination, all right, with, all right, the support line itself, right, being broken, right? So that itself, right, is causing, right, a bit of concern in the markets, all right, and why we should be very, very careful, right? And okay, we have a retest. Can you see, right? So the market did try to recover, right? It has this doji candle over here. This, I think they call this, my memory fails me, all right? The morning star or something like that, right? The morning star formation, but it failed. All right, it failed, right? And then it challenged again to try again, right? And then it failed again. Yeah, okay, now, so we are in a market right now, okay, that is falling off, right, the support level, all right? And not just that, right? So this, right, resistance have proven to hold, right? So the resistance has proven to hold, right? And on top of that, we have another concern right now, right? And the other concern is this. I did say that on a bigger picture, right, it is trading within this horizontal channel, right, of 4,500, right, to about 4,150, right? So 4150 to 4550, right? And okay, now if you're noticing over here, this break that we have yesterday, right, and with the follow through today, right, we are officially broken, right, with the 4150, right? Now, why do I say this is a big concern? Right? Does anybody know? Right? If you do, right, you can leave your comments in the Facebook live session. Right? Please feel free to leave your comments and join in. Yeah, with your thoughts, of course. Right now, the reason why I said this is actually a concern is because if I pull this time frame out to 1 year, right now you can see that over the last 1 year, right, this support price level has never been broken, right? But now it has, right? And not only has it done so, but it has done so on the back, right, of rising interest rate environment, right? And I don't know how you're going to argue with me, right? But if you go back and do your historical check, every time, all right, the interest rate goes up, right, markets start to weaken, markets start to fall, the bear market start to work its claws, all right, if you want to say it that way, right? The claws are going to get deeper, the claws are going to get more blood every time it claws through you. Yeah, okay, now, so that is the concern that we're seeing over here, right? And, okay, if you're still not aware of this, this is going to be a very, very pivotal week, right? Which means how the market closed tonight, yeah, all right, pay attention, how the market closed tonight, all right, is going to determine how the market is going to move in the next couple of weeks, all right? So let me show you now why I say this, because I'm now showing you a 3-year week-to-week chart. So this is a weekly chart. Now, so if you know your time frames, all right, just looking at from a historical context, all right, okay, the shorter time frame will always give way to the middle time frame, right? And the middle time frame will always give way to the longer time frame, all right? So we start with the longest time frame having the strongest conviction, all right? Now, so if you see that over here, we are on the verge of a break also on the weekly, all right, for this chart over here. All right, so it's not just breaking on the daily, all right, but it's also breaking on the weekly, all right? And I say this is dangerous. Why? Because now if I zoom this chart out, can you see that the next support level is nowhere to be found until 3,585? That's why there's a concern, all right? So if it breaks here today, all right, we have a lot more room for this market to fall. All right, and it may not stop at 3,585 because that's not a very, very strong support level. All right, the strong support level is actually on this breakout over here. All right, this breakout move at 3,400. All right, so markets can actually fall, all right, and continue falling like a vacuum all the way to 3,004. All right, and that's why it's actually getting scary. All right, and on the back of this, many of you are probably puzzled, a little bit puzzled. Terence, the Fed raised interest rates according to what is planned, and then the market rallied, All right, remember? Yeah, the market actually rallied like over 100 points for the S&P, but only to give everything back and more yesterday night. All right, and following through today. Why? All right, the answer is because, all right, all lies in the interest rates. Right? Everything right now is lying in the interest rates. Can you see what's happening? This is the 10-year Treasury interest rates. And if you look at the chart over here, right, we have a break, ladies and gentlemen. All right, we have a break of a very, very key level over here. All right, why is this level so key? Right, because this level, this resistance over here is basically $30. Now, you may not understand what $30 represent, but $30 basically represents an interest rate of 3%. That's how you read it. Yeah, okay, this TNX over here represents the 10-year Treasury index. Yeah, so $30 is actually representation of 3% over here. All right, and now the market is actually breaking, all right, higher than 3%. All right, and that's danger. All right, why? Because people don't like it. All right, so on the back of this break, all right, they are making the market pay for it. Yeah, okay, all right, because they are making the market pay for it. So what you see the Fed announce, right, doesn't actually play any part at all. Why? Because the market have their own determination of what interest rates should look like, right? And we actually know this. Markets are kind of forward pricing. They take in what is about to happen, right? And then they put it into the pricing. So the market is already pricing even higher interest rates, right, before the Fed does it. Yeah, so that's why it's causing the market a lot of uncertainty, right? And of course, you know that when markets see uncertainty, right, they sell first and think later. Yeah, okay, they sell first and think later. Right? So how do you work this market? How should you invest for the rest of the year? You need, right? You need to go back to the basics. Right? When I say the basics, it means you need to go back, right, to what we call Buffettology. Yeah, all right, Warren Buffett, whether you like it or not. Right? I don't mean following exactly him or going to read his books, no. Right? But I mean finding deep value. Right? And not just deep value. You need to find deep value companies, which means companies that are cheap, right? Companies that have been sold, right? Where people don't want to own them right now. But at the same time, these companies are still making very good profits. Yeah, these are the ones that you need to hide your money right now. And in fact, these are the stocks, right, that is going to do well amidst this sell-off. Why? Right? Because when money needs to flood this market, right, they have to move it from one stock to another. So when the fund managers are finally pressed into a corner, right, and they have to get out of certain high-flying stocks simply because now the charts start to look very, very ugly, right? Let me show you some over here. All right, now Amazon, right, used to be the darling, right? Amazon used to be the darling of funds over here, right? But let me tell you right now, with this break, right, right, now the fund managers are now pressed, right, to actually start selling their portfolio of Amazon stocks. Why? This is 1 year chart, ladies and gentlemen, right? Amazon is now at its 1 year lowest. So can you imagine how are they going to account for this if they show their clients that they're holding Amazon, which is trading at its 52-week low, right? They can't answer for this. So what do? They dump it, all right? But if they dump it, they need to find somewhere to put all this money. So how are they going to protect themselves? Deep value, because that's where safety is. Yeah, okay, so you see the rotation of money, and if you understand the game, right, if you've been immersed in it long enough, it doesn't have to be difficult, right? Because one, you put in a lot of hard work. Two, you understand the market enough simply because you have soaked yourself in for so long. Yeah, okay, simple common sense logic, all right, actually helps you make good decisions. And that's something that I always teach my students. If you want to make a trade, if you want to buy a stock, what are your reasons, right? Do you have a reason to make that action, right? If your reason is just because you want to make money, then you're going to be in a lot of trouble, right? If your reason is because, oh, my friend bought it, you're in a lot of trouble, right? If your reason is because this is the most popular stock right now, then you're in a lot of trouble, right? Why? Because just telling yourself that, do you realize when I say it, it doesn't make any sense at all, right? Who would invest your hard-earned money with those kind of reasoning? You don't. You shouldn't. Yeah. Okay. Now I'm done nagging. All right. Everybody's too quiet, which means I've nagged for too long. All right. So I'm going to get started. All right. So let me get started over here. Right now. So let's go to our portfolio. All right. So let me eke it out over here. All right. So our portfolio over here stands like this. All right. Our first stock over here, which is still open. All right. It's a WBA, right, portfolio put of a $45 strike. All right, now, so this expires on 20th of May. So our current portfolio, all right, has options that expires on the 20th of May. All right, so let us go look at what WBA has done, right, in the last 1 week. All right, now, so this is WBA, ladies and gentlemen. All right, so we have WBA actually rebounding. All right, can you see that? All right, now, so markets are falling today. Look, markets are down 27 points. All right, and can you see what's happening to WBA? All right, it's rebounding. It's rebounding 2.8%. Why? Like I said just now, when markets are falling, all right, deep value starts coming in. Deep value comes into play. All right, and WBA, all right, is one of those deep value companies that we said earlier. All right, so now it's basically taking back, right, this $43 support price level. All right, so it's taking back, all right, and right now, same like I said earlier, all right, the Maribozu candle. So if this holds, right, we actually have a strong reversal candle, right? And it actually did this, right, a couple of days ago already, all right? So this stock looks like it's poised, right, to start heading higher, all right? Now, and of course, I'm not going to take any actions on this, all right? So if we go here, all right, hang on over here, oops, all right? If we go here, all right, and we look at 20th of May, all right, where's our put option? All right, 45. All right, so we have a 45 put option over here. All right, and if I close it today, all right, I'll probably close it for the last done is 144. All right, so let's go take a look. 144. All right, we're still not having any profits, but of course, like I said, I'm not looking to close this trade. So I'm leaving it in my accounts over here. Yeah, all right, so no closes on WBA. All right, now let's go to our next stock. Our next stock is GPS. All right, we have already closed this trade for a profit last week. All right, so no need to talk about it now. All right, now next one, Verizon. All right, we have a Verizon as well. All right, a portfolio put with a $50 strike price. All right, now we got this for 50 cents. What is Verizon doing today? All right, now, so let's go to Verizon over here. All right, Verizon was punished last week. All right, we were amidst the sell-off. All right, but look what it has done since then. Market has fallen in the last 1 week, all right? But Verizon has actually rebounded, all right? Now, and this, right, is actually like a reversal pattern that we're seeing over here. Yeah, okay, now, so I do expect Verizon to continue doing well. Yeah, okay, amidst, yeah, okay, good, valuation over here. If you see, all right, it's trading below 10 PE, all right? And telecommunications have always been known as a defensive stock. Yeah, okay, defensive stock. Yeah, all right. Thank you. Take in. I just saw your comment over here, nagging with wisdom. All right, but nobody likes nagging. Yeah, all right. Now, so anyway, all right, let me just X this. Okay, so 20th of May, Verizon Wireless, no actions, okay? We have a 50 put, so we're deep in the money right now, but there's still 2 more weeks to go. There's 14 days, all right? So it can always reverse another $2 and we'll be safe. We'll be home. So I'm not concerned over here. All right, now next stock, our next trade is Pfizer. All right, so we have a Pfizer 20th of May, $45 put option. All right, we sold this for 87 cents. All right, so let's go to Pfizer. All right, now, so Pfizer over here. What do we have? We have $45 put. Am I right? Yes, we have a Pfizer $45 puts. All right, and today it's worth 42 cents. So if I close it right now, it's worth about 42 cents, right? And that's about half, right? Half the premium that we have collected so far, right? So half. 2 more weeks to go before expiry. I've collected half the premium. There's half left. So I think that's good value. That's good cash flow, all right? So because the stock is so cheap, all right, I'm just going to hang in there. Yeah, all right? So if you look at the charts, all right, it's holding the level strong. Our strike price is actually below this, all right? So I think it's going to do well. So I'm going to hold on and leave it to expiry. Yep. Now, so let's go to our next stock over here. All right, let me do this. It may be better. Yep. All right, now, our next stock over here is Intel. All right, we have a 20th of May, $42 put option. All right, we collected 82 cents for this. Let's have a look. All right, Intel bouncing around, not doing much. We actually entered on the back of its earnings, remember? All right, if you remember or go back and watch the recording, I said, all right, it's not the best time to enter the stock because we might be early, right? But Intel hold its ground, right, and actually hold it very, very strong. All right, so over the last 1 week, it went up, it went down, but it literally, pretty much did nothing. All right, so let's see what our put options is worth today. All right, we have a 42, right? Yeah. 42. So it's worth about 50 cents today if we close it. All right, so we have a $42 put option, 50 cents. So there's still a lot of premiums left. All right, so I'm going to hold it all the way to expiry. Now, the last one, PayPal. All right, so we have a PayPal $75 put option, also for 20th of May. All right, we sold this for 88 cents. Let's see what we have right now. All right, PayPal is still about $83. All right, so we still have a lot of buffer. All right, okay, PayPal still looks weak. All right, but I like its fundamentals. All right, now it's trading at a 27 PE. All right, but if we go to the 5-year PE average, all right, it's trading at half the valuation. Now, I agree, right? PayPal is probably not as lucrative or not as exciting a payment gateway as it used to be, right? So you might be arguing, Terence, the valuation should come down, right? But we are at a 50% discount, right? And if you realize what I'm doing right now, I don't need the stock to go up, all right? If you see how I'm trying to make my money, right? My strike price is here, 75. Let me draw it out, right? Somewhere here. Okay, now I don't need this stock to go up, right? I just need it to waffle around this price level, right? And in 2 weeks' time, right, I can take my money. That's it. Yeah, so I don't think that, like this valuation is dirt cheap. Yeah, okay, I think it's fair value. I don't see a lot of more selling in sight because they have sold the stock off from $230 down to 82. That's massive, right? So you might be saying, Terence, right, they sold off and this stock dropped by literally, right, almost 70%. Why are you still getting in? Very simple. I said this before, right? I will only get in on companies that are making money, all right? So please leave a comment and tell me right now, right, based on what you see over here, all right? Now, so 4 quarters ago, PayPal made $1.15. They actually beat their estimates, right? Now, 3 quarters ago, they made $1.11. Again, they beat their estimates, right? Now, 2 quarters ago, right, they made $1.11, and again, they beat their estimates, right? And the recent quarter, right, they made 88 cents, but they still beat their estimates. So can I ask all of you, right? We have a company where the last 4 quarters, right, the company has produced results or produced profits that are better than what the analysts have expected of them, right? Does it warrant, right, a 70% price sell-off? Does it tally? Yeah, okay, that's what I'm trying to ask over here. Yeah, okay, does that logic kind of, is it, what's the right term, all right? Is it like warped, all right, or it's, it tallies up? All right, leave a comment, let me know. Desmond, are you sure? That means, right, with a company that's making money, it should be sold off 70%, right? Is that what you're trying to say? Or with a company that's constantly beating estimates, right, it should be punished and sold off 70% like that, right? Versus companies that look like Peloton, right? Peloton has fallen from 129 all the way to 15. That's 90%, right? But why? Because Peloton has never made money, right? They have never made money. Or, right, another pandemic, darling, Fastly, right? Fastly has dropped from $64 all the way down to 13, right? Why? Because they've never made money. Yeah, okay, and not just Fastly as well. What else is there? There's something else very recently. I can't remember it on top of my mind. All right, there's companies like Lyft as well, right? Fallen from $63 all the way to 20. Why? Because despite the pandemic, they still can't make money. They can't monetize. They can't make profits, and that's not good. Yeah, okay, that's not good. Yeah, okay. So this is the time, like I say, right? Buy deep value companies that have been punished unnecessarily. Why is it unnecessary? Because they are actually good businesses. They are making money. They have a viable business model, right? That's what I'm trying to tell you, right? Not these kind of, I don't even know what you call them anymore, right? I can't call them .com stocks. I can't call them technology stocks or pandemic darlings, right? Okay, because yes, this is the company, right? We even have Teladol, right? That fell from 174 all the way down to $34. Why? Because seeing doctors via Zoom, right, was the hit thing, but the company never achieved profitability. And now with the pandemic gone, right, their prime time to make biggest profits is gone as well, right? So what do you think is in store for the future of this model? Can you see the problem now? Right? So many of us get sucked in because of the greed. Many of us get sucked in because you're hearing a lot of people saying, buy this, buy this, buy this. Right? But now you're left holding it blindly. All right? Why? Okay, because right now some of you are also holding on to stocks like Lucid. All right, why? Let me ask you a question. Why is Lucid, right, ever a good investment? Why? Right? Apart from the SPAC, right, the SPAC holding, right, that was trying to take Lucid public, right, because they got public via a SPAC, right? That was just all hype. Yeah, okay, there was no basis behind it, right? Would you ever see Lucid, right, try to take on the entire automotive industry? That's what I'm trying to say, right? Because until today, there is only one Google. Until today, there's only one Apple. Right? Until today, there's only one Amazon. Right? I hope you see what I'm trying to get at. Right? Is Tesla going to be the one Tesla? I don't know. Why? Because automotive, right, is a very, very diversified economy, right? A very diversified business, right? I would just say this, right? I know that there are many Tesla diehard fans, but if I were to go on the street and poll 100 individuals, right, for a slew of brands, right, if they produce their EV vehicles, right? I'm not saying they have it right now, right? But assuming, right, if Toyota have their own EVs, if Honda has their own EVs, if Mercedes have their own EVs, if Ferrari has their own EVs, and Porsche as well, and Beamer, right? Okay, because all these are coming up. They're going to come soon, right? So if they all have an EV, and I run a poll of 100 people, what do you think is going to be the percentage of people, right, who are going to choose Tesla? All right, what do you think it's going to be? Yeah, all right. Now, because if you poll the iPhone, all right, or Apple, right, that's at least 50% or more. Yeah, okay. But when you run a poll like this on Tesla, right, or electric vehicles, right, what is Tesla's market share? Right, there are so many choices. Yeah, okay. So that's why I'm trying to say there's a lot of challenge ahead. Why? Because Tesla has done well. I'm not faulting the company; they have done well, right? But right, some of their biggest growth, right, has been done. Right? So now is the period of realization. So if the valuations are too frothy, right, and when people hit realization, right, prices will come down. All right. And I say this from past experience. Why? Because remember, during the dot-com days, right, big companies like Microsoft, big companies like Intel, they were pushed to the height of $100, right, only to come slamming down back to $15 to $20 and staying there, right, for 5 to 6 years before they started climbing again. Were they bad companies? No. There's only one Microsoft, right? And honestly, until today, there's only one Intel, right? But because of the hype, because of the overvaluation, yeah, okay, they suffer these consequences, right? And market is never different, right? Market may be slow. That means the timeline may change, but market is never different, right? So don't tell me it's different this time. Oh man, again, I promised not to nag, and I did it again. Okay, I'm gonna stop. Okay, I'm gonna stop. Okay, let me get back. All right, now, so I'm done. All right, I'm done with PayPal. All right, yes, same with C Limited. All right, Nelson, same. All right, it's the same with C Limited. All right, why? All right, because, all right, how would you rate Shopee? All right, how will you rate Shopee, or how will you rate online games? Right, have they reached their peak? Have they reached their peak? Right, if you feel that they have reached their peak, then, all right, their profitability or non-profitability right now is definitely a concern. Yeah, okay, that's definitely a concern that you must think about. Yeah, okay, Susan. All right, now, like I said, all right, now, 88 is not good. Right, 88 is not good. Right, but if you compare the fact that 88 still beat estimates, yeah, because the analysts were expecting less, so their expectations are lower, but yet the company beat it. So can you see why, right, things got better or prices got better? Because the situation became less bad. Right? It was terrible. Right? People expected worse, but it was less bad. Yeah. Okay. So that's why prices jumped. Yeah. Okay. All right. Now, so I'm done. But despite all that is done, it simply means that today I'm not closing any trades. But right, I've got capital left. I've still got about another 20% to utilize. At the same time, all right, I can still add on to my target. I've already achieved my target, right? But I can add on more to it, right? Why? Because I actually found, right, a trade that I want, right? Yes, right, market is selling off, but there's still good stocks if you know how to find them. Yeah, okay. There are always good stocks. That's what I want to say. Yeah. Okay. Now, so what stock am I gonna add today? All right. I hope you're ready because I'm gonna gun for this cash flow over here. All right. Now, so the stock that I'm looking to add, where's my? All right. It may catch you by surprise over here. All right. But the stock that I'm gonna add today is actually a bank. Right. It's probably a bank that you probably never heard about. All right, or never heard of. All right. Now, so where am I? Let me bring down the time frame. Right, I'm actually going to go with this bank called the Fifth Third. All right, Fifth Third is basically a state bank. Right, there's America is a very big country. Right, they have big banks like Citibank, like Bank of America, like Wells Fargo. Right, and they have smaller state banks. Right, that operates only in specific states. Right now, so why am I willing to go with such a bank? Number one, right, many of the big banks are going to have a fallout of their revenue, of their profits, right, from the Russian war. All right, why? Because Russia is going to default on a lot of their loans. Yeah, okay, so many of these banks are probably underwriting some of these loans, right? So it's going to affect their bottom line. But when you're talking about a state bank, right, I don't think they've got any exposure to Russia, right? So that's protection number one, right? And number two, right, if you look at the valuations of this bank, it's only at a 10 PE, all right? Now, so this bank is trading at a 10 PE, right, with its 5-year average, right about there as well. Yeah, right about there as well. All right, now, next up as well, all right, the stock has been punished and sold off from $50 all the way down to 35. Yeah, I think it's been punished hard enough, right now. And on the back, right, of something similar to what we saw with PayPal, right now, if you work this out, right, they made 94 cents 4 quarters ago. They beat estimates. All right, now 3 quarters ago, right, they made 97 cents and they beat estimates. Right now, the last 2 quarters, right, now they reported 90 cents, which is in line, right, with what was estimated. Right, and the last one, the most recent one, right, they reported somewhere close. They missed it, but it was somewhere close enough. Right, so I think, right, it's pretty doable. I don't expect more downside. That's what I'm trying to say. Right, I don't expect a lot more downside, all right, from this stock right now. Yeah, so I'm gonna gun for some cash flow over here, right? And let's see what can I do today. All right, I'm gonna go for 34. All right, so if you see over here the low, right, it's actually at 34, 35 for the last 1 year. This is a 1-year chart. Yeah, okay, so I'm gonna go, all right, for the 34 strike. Why? Because all I want is to add additional cash flow to my already achieved target. Yeah, so I don't need to take on too much risk. Yeah, okay, anything I make now is pure extra, right? So I can afford to go safer. Yeah, now, so 34, all right, let's see what can I do it for. Right, 34, I can probably do it for 40 cents. All right, now let's get our positioning sizing right first. All right, so I'm going to add trade number 7. All right, so before I do this, it has to be prudent. I need to keep within my 100,000 mark. 34, 20th of May. I'm doing this on the 6th of May. All right, if I get this, it'll be 40 cents. All right, adding 120. Can I do? Let's see. Can I do 5? Let me see if I can do 5. Right? Yes, I can do 5. Right? That will make my exposure only at 91,000. Right? So I can do 5 on my portfolio today. All right. So let me go ahead do 5. All right, now, so I'm in over here for 40 cents, but my order is not taken yet. All right, so if you see on my platform right now, there are no trades that are being filled. So that means my order is still currently out there. Yeah, okay, still currently out there. All right, now, so I'm not filled. All right, so I'm just going to give it 1 or 2 minutes while I'm still live with all of you. All right, so, if you have any comments over here, all right, you can leave them in the chat, not really a chat box, right, but the Facebook live session. All right, I'll be more than happy to talk about them. All right, no, take in, I apologize. not Starbucks today. All right, Stanley, not Tupperware. All right, not today. Okay, Sam, right? Really, you used to have an account with them? How do you find their business? All right, do they have a steady slew of business, Sam? All right, it'd be good to have a kind of like an inside experience. Right now, Desmond, all right, this is a very good question, Desmond. All right, how would this compare to Citibank's PE ratio of 6 or BAC's ratio of 10? I said it just now. If you picked up the hint is all in terms of the Russian fallout, right? Because the Russian fallout, right, has not been priced in or is not visual in this quarter, right? It may start appearing in the books of the next quarter, right? So that's definitely a headwind, right, for big major banks, right, like Citibank and BAC, right? So rather than jump into this bank and then suddenly, right, having Citibank say, right, they have to write off millions and millions of loans that they have made out to Russia, right? That's going to bring the stock price lower. Yeah. Okay. So these are what we call dangers over here. So that's why, all right, I rather stay away from big banks at the moment, right? Because higher interest rate, right, is going to pressure the banks as well. People are going to borrow less. People are going to do less business with the bank, right? So it's going to hurt their profitability. Yeah. Okay. Now, so if they're going to be hit further, right, by what's going on in Russia and their business with Russia, that's definitely not going to be a good sign. Yeah. Okay. What's a friendly bank? All right. Nice. I like this. Yeah. Okay. I like seeing this. Thank you very much for your feedback, Sam. We're not getting bitten. They're not giving it to us. The last done is 40 cents. So definitely we can get our 40 cents. Right? It's just a matter of how they want to make us wait for it. And I've noticed something as well, ladies and gentlemen. All right, I've noticed something. All right, now, so this stock, right, I'm not going to lower my expectations. Why? Right, because this stock only trades at premium rises of 5 cents per tick. Right, we call it per tick. Right, why? Because if you look at the premiums, the bid and ask, right, every single strike, right, has a 5 cent interval. Right, so when I slot myself at 40 cents, I'm already right in the middle. Right, so if you see the 33 strike, it's 25.35. Right, so if I traded this, I would have put 30, which will put me in the middle. Right now, so this was earlier 35.45. So by going 40, we were in the middle. Yeah. Okay. Now the next strike 55.65. So going into the middle will be 60. Yeah. Okay. Now, so even if I move it to 37, I'm not gonna get filled. Right. Only if I go down to 35, right, then will I get my order filled. But I'm unwilling to do that. Okay. Now let me justify why I'm unwilling to do that. Now, without this trade today, have I already achieved my $2,000 target for cash flow for this month? Right? Have I already achieved it? Right? Leave a comment. Let me know. Right, Irene, you filled already. Congratulations. Not my order. Oh, nobody wants to join. Yes. Oh, thank you very much. I could always rely on you. Yeah. All right, Anthony. Thank you. All right, now, so I've already achieved my target. So whether I get this order done or not, right, it won't really affect, right, the significance of my outcome, right? So I'm unwilling to bend my back backwards, right, just to get this extra $200 over here, right? So I'm willing to wait. That's what I'm saying. Yeah. Okay. Yes. All right, Susan, you're right. So I'm willing to wait. All right. Now, so here's what I'm going to do. Right. I'm just going to show you one more time. My order is still not filled. Right. Still not filled. Right. So I'm going to leave it on. Okay. And if it gets filled throughout the night, okay, I will leave a comment, right, in the Facebook live session, right, to let all of you know that my FIT, right, okay, FITB, right, order is filled. Okay. Fair enough. Okay. All right, now, so before we end off today's session, I'll just put it in yellow first, okay? All right, so as of now, it's not filled yet. Yeah, okay, Anthony, all right, you're filled as well. Congratulations. All right, my order is not filled. Okay, now, So as of this moment, right, does anybody have one last question? I'll be happy to answer one last question before we end tonight's session over here. All right, Su Yong. All right, for this new strategy, it's not really a new strategy. All right, okay, remember, all right, this session over here, all right, is catered, is designed purely for the public crowd over here. All right, so people that are not inside our community, people who are not inside, all right, our trading, mentorships. Yeah, okay, all right. So we're keeping the strategy very simple. All right, I find a good company. All right, I think that it's not going to fall anymore. I believe that it has a chance of going higher, but instead of buying the stock, right, I'm choosing to sell a put option, right, and make my profits. Yeah, okay, so that's the only difference. And I'm setting aside, all right, enough cash, right, just in case I'm asked to buy up the stock. Right now, so this will prevent me from any margin calls or any danger, right, of trading more than what I can afford. Because what's my worst case outcome? Right, by expiry, I have to start being an owner of some of these stocks. Yeah, but it won't be all. I can promise you that, right? Because I'm diversified. Yeah, okay. So not all of them will force me to buy up the stock, right? But even if I buy up the stock, many of them are so cheap, right, that I believe that their prices can rebound and I can start selling them and lock in my profit after. Yeah. Okay. So people call this what do they call this again? The options wheel, was it? Yeah. Okay. I think some people call it the options wheel. I've been doing this for 10 years, a whole decade, right? And I never focus on what they call it, right? Until somebody educated me. I can learn something too. Right now. So Facebook user. Right now. So remember, go to StreamYard and improve your profile. Okay. Now, how do I know that it moves in 5 cents interval? Right now, it's usually very, very obvious. Right? Because for every bid and ask, right, you only see a 0 or 5. Right? So this is from experience I'm telling you. If you see a bid and ask, right, of every single strike, right, only showing 0 or 5 at the last number, right? Okay, that's right a very, very, very clear sign, right? Because if you go to PFE, look, you have 1, you have 3, you have 7, you have 9, you have 6. Right? See the difference? All right, now next one. All right, if I go to PayPal, right, you have 4, you have 1, you have 8, right? It's all over the place. Right? It's not like what you saw earlier. It's only 0 or 5. Yeah. Okay. All right. Now, so Susan, think of it this way. All right. There must be reasons for us to get in on a particular trade. Right. But at the same time, right, there must be reasons for you to get out of the trade as well. So if you say there's 1 week left, but there's 50% of the profits still available, then what is the reason behind you needing to get out? Because if you feel that Intel is still undervalued, if you feel that your strike price is still safe, right, then the question is, why do you need to take off the profit? Yeah, all right. So you need to find a reason, which we can't tell now, right? We can only tell 1 week from now. You get where I'm going? All right. So don't try to jump the gun. Don't try to estimate. Don't try to hope. It's just like people asking me at the moment, Terence, where do you see the market bottom? I don't know, right? And I don't care. Why? Because I can't wait for it to happen. Right? I need to get cash flows into my portfolio. I need to find good trades. So where the bottom is not going to stop me, right, from trying to find good trades that are available. Right? So don't let it stop you as well. As long as there's good reasoning behind why a trade should be done, just go ahead and do it. Yeah. Okay. So Facebook user, all right, continue joining us every Friday because that's what will be unfolding with all the positions that I've taken over here. Right. So as I put them, all right, I will also start closing them if the timing is right, if it makes sense for me to do so. All right. So that's why coming back every Friday, right, will mean, right, that you will improve yourself as an investor. Yeah. Okay. Now, so before I forget it as well, right, if any of you really like, my nagging, right, if any of you really enjoyed my nagging today, all right, do help me click the like button. All right, okay, do help me hit the share button as well. Help us reach out to your friends. All right, okay, or tag your friend in one of the comments over here. Right, so they will be aware of this session as well. All right, if you can do that, all right, I'll be very, very, very thankful. Yeah, okay, all right. Thank you. Take it. All right, hit the share button. Okay. All right, hit the like as well. All right. Okay, now, so I think we're done for today. Let me do one last check. No, my 40 cents order is still not done. Right, so I will be updating it later on in the Facebook comments itself, right, if it is done. And for now, right, I will be seeing all of you come next Friday, okay? All right, so I'll see all of you next Friday once again, and we update our portfolio. All right, hopefully my order is done, right, and then we'll be at almost $2,500 for our first month together. All right, now, so thank you very much once again for your time on a Friday evening. All right, I will leave you back to your weekend again. All right, bye for now. This is I'MPossible Terence signing off from this Facebook Live session, and I do hope you'll join me again next Friday, okay? All right, take care, everybody, and I'll see you really, really soon. Bye.